Let me start by introducing Kumba, who we are and what we do. The structure of the presentation that will follow seeks to do a couple of things. We want to give you a little bit about our track record, where we've come from, who we are. We want to tell you a bit about our people and the difference that we believe we're making, within society and within our shareholders. And we also want to give you an indication of where we're going in terms of our growth. And that said, we'll sum up, the message around sustainability or ESG with some very real examples, and how we make a difference in the South African community or the global, community. Right, as most of you will know, Kumba is a pure play, iron ore company on the JSE. We are, as mentioned earlier, we're 70% owned by Anglo American. We've got 3 mines within the, within South Africa. 2 of them are in the Northern Cape, virtually within, 70, 80 kilometers of each other. That'll be Sishen, which is the flagship mine, as well as Kolomela. We also have Tabazimbi, which is the 3rd operation, which is located in Limpopo. And these are all 3, open cast iron ore operations. In terms of, our product is basically, railed down in terms of from the Northern Cape, to Saldanha, and we export the bulk of our product to China. We also have some going to Japan, Korea, as well as MENA, which is Middle East and North Africa. We have a local component, which is committed to ArcelorMittal. That's our domestic supply arrangement. In terms of our, ownership structure, as mentioned earlier, Kumba Iron Ore is 70% owned by Anglo American, and in turn we manage the SIOC Iron Ore Company, which is 73.9% owned by Kumba, manages our operations and runs, the assets. Our empowerment sits within the SIOC or Sishen Iron Ore Company. We have an empowerment partner in Exaro, my colleague Mzila, who was here earlier. They own, 19% of SIOC. We also have, I mentioned at the beginning, the emphasis on people. We have the SIOC Community Development Trust, which is made up of beneficiary trusts within the host communities, the areas that we operate in that also have a 3% stake. And most importantly as well, we have our own employees within the organization who participate in the ownership of the company through our Envision share participation scheme with 3.1% of the company. So we have shareholders, we have stakeholders, and we have stakeholders, most importantly, that have a seat on the table, that have an interest in the day-to-day running, of the business, live with us, work with us, and we intend to make a difference to that community or to people whom we touch, in the running of our business. So you'll find that one of the common themes that that runs through this presentation is how we're making a difference, how we focus on people. And that's, if you look at the developments that are happening within sustainability, there's a big emphasis on, sustainable human development. So if I can move on to our strategy. I think our strategy is informed, by our vision. And people are key to ensuring that we deliver on this. So as you'll see within our, mission, we have emphasized that it's all about people making a difference in a company making a difference. We're touching people, we're transforming lives. When we talk transformation, it's not a tick box exercise, we're actually making a difference. How do we ensure that we deliver on this? We have a set of values, which is like a lens within which, or a filter with which we see everything that we do. And our values are pretty straightforward. We believe, safety is sacrosanct, it cannot be compromised. We believe in care and respect in terms of how we treat each other, integrity, accountability, collaboration, and innovation. So having, set the scene in terms of what we see ourselves in terms of the vision, being a leading value-adding supplier of iron ore to the global steel industry, building on the assets and our people that we have, and believing that we can be a development partner of choice within, the business community and the communities we operate in. We live out through these values, and they help us, deliver on our strategy, which is built on 4 pillars. We think it's important that everybody understands, in our organization, what our strategy is and what role they have to play in delivering on that strategy. And our strategy is built on 4 pillars, which is optimizing the value of current operations, capturing, value across the value chain, as well as delivering on growth projects, the growth story, as well as organizational responsibility and capability. That's how we've built our strategy. In 2013, we've had a serious rethink or revision of our strategy. And one of the things we did was, have a fresh look and say, what are the things that we need to reprioritize, and what are the most significant things where we need to renew, we need to optimize, and we need to revisit and improve our operations. And we believe that an essential part of this, strategy implementation is to ensure that, everybody has a stake and everybody, plays their part. What we've done as a result of this participative process that we went through in terms of engaging and reviewing, our strategy, is we've summarized it now and say, in the short term, what are the things we want to do? We've said in the short term, we want to maximize the value for operations within the current logistical capacity, which is the port and rail setup. We've said in the medium term, we want to optimize and execute the growth of the South African project pipeline, which is growth from within South Africa. And then in the longer term, we've said what we need to do is to explore opportunities with regards to a second footprint. This is looking at West Africa. So these are the things that we are doing. These are the revisions, the optimization that we've done to our strategy to relook at it, both from a short, medium, and long-term point of view. So we would like to grow in South Africa, and we'd like to grow a second footprint in West Africa. And having done that, we then come back and say 2014 is largely about execution. How do we deliver on that commitment? How do we deliver on that strategy? But before I go on to where we're going, I think just a recap in terms of our performance in 2013, the key features and where we've come from. There are a lot of figures in the rest of the presentation. I'll try and use the numbers and the figures to support the story, so I'll not dwell in too much detail on the figures themselves. So most of the financial and operational figures that I'm included in here are from the 2013 financial year, the audited figures as of the 31st of December 2013, unless otherwise stated. So we delivered a strong performance from a financial point of view in 2013, and this was supported by an iron ore price of about $125 per ton, and at the same time with an exchange rate that was sitting on average at 9.62, which enabled us to deliver these good results. However, profit remains sensitive to the iron ore prices as well as to the exchange rate. And as many of you will know, the iron ore price has significantly decreased in the recent few months on the back of concerns with the slowing Chinese economy and the continued strong supply from the majors. So, however, we do what we can in terms of the factors that we can control, and we expect there will be a slight recovery in the growth towards the end of the year. On the operational front, what has been our obsession of late, we've been looking at technical studies aimed at optimizing our operations, and particularly at Sishen. We've concluded a set of technical studies which have now confirmed that Sishen can deliver and can operate at 37 million tons per annum, for the remainder of its life. We've also done, significant work to support that by ramping up on the west component, and we see that we will have a growth in the west, volumes moved, peaking at 270 million tons per annum in 2016. So that's the work that we're doing, and a lot of this redesign work at Sishen focuses on the pits in terms of getting a better understanding of how we can manage our pushbacks so that we can expose more, ore sooner and more effectively. And this has then resulted in, improvements to the mine planning. It has given us better utilization of our equipment, as well as mentioned at the beginning, increased our levels of exposed ore. So we're pleased to report with the progress that is happening at Sishen. However, there's still a lot of work that has to be done, at Sishen. So the core and the focal area remains, Sishen implementing our operating model, which is what we often refer to as business process framework, which will then achieve those productivity improvements that I've mentioned earlier. The additional work that we're doing at Kolomela is a new mine. It is our newest mine and continues to operate excellently. We continue to push the guys at Kolomela, and they've been operating above expectations since commissioning. So they're giving a strong performance overall, and in the first half of this year, they're on track to produce 10 million tons. I've mentioned the domestic component earlier that we have with the agreement with ArcelorMittal. The new agreement came into effect in January this year. So we're doing some reconfiguration work at Tabazimbi. And the intention there is to unlock some of our low-grade ore and try and get Tabazimbi to be a low-cost, long-life operation producing about 2 million tons per annum. I think that gives you background into the business in terms of the 3 operations that we have, the activities that are going there, the volumes and the growth prospects that are associated with each of them. If I can move on to the people aspect. I think you will hear this often when you talk to our colleagues, when you talk to people within our operations, when you talk to our stakeholders. We are a very people-centric organization, and our intention is to share value, and we want to create and share value with our people and all our stakeholders. In the Northern Cape, we are the largest private sector employer within the Northern Cape. We employ 13,000 people, and 84% of these are from the local communities. So we are a significant player there, and as mentioned, the intention is to make a difference, to influence people's lives and change them or transform them. On the people side, I think it's important to also say, apart from providing a livelihood, one of the things we focus on, as mentioned in our values, is safety. And safety is of paramount importance, particularly to mining operations. So we continue to focus on zero harm. But that said, we did suffer a setback earlier in the year when we lost one of our colleagues in a work-related fall from heights incident. Tragic as that event was, our organization remains committed to learn from it and ensure that we do not have any repeat occurrences in future. Safety remains of paramount importance to us. In terms of the general labor environment within the organization, we've recently concluded a 3-year wage agreement effective from 1 July, and it runs until 2017. So we're pleased to have this stable environment. Yes, we are unionized, but I think we've for now we've got a stable relationship with our unions, and this can also be seen in the general employee staff turnover rates, which are generally low. And so we have a stable environment, and we have a few accolades which substantiate that position in terms of being having been voted or certified best employer to work for. And in terms of people, perhaps it'll be amiss not to touch on the leadership. If I can move on to the leadership team within Kumba, starting with the board. I know we had a couple of discussions with earlier presentations around the board. All I can say, succinctly, is Kumba is led by a very diverse board with good representation, whether you look at it from a race or gender point of view, and a good mix between executive, non-executive, and independent non-executive directors. And more or less, the same can be said in terms of the management team. Our EXCO, relatively diverse grouping, and that is the leadership of the organization. There are people within the organization entrusted or trusted with coordinating the delivery by the collective of our intense objectives and strategy. Right, if I can move on to the growth story. As mentioned earlier, our growth story is in 2 parts. We have the South African growth component, which is targeting 5 million tons over the next 3 to 5 years through what one would call brownfield or incremental growth from the existing operations. So the projects that you have there, I'll not go through them in detail, are at various studies and various stages in terms of our studies. And we expect to follow through on these and take them through as appropriate and support our growth objectives. And it's also important to note that the success of the delivery of the outputs of these projects is dependent on the iron ore expansion channel, which is the conduit through which we deliver our product to our customers. So that is an element that we're working with Transnet to try and facilitate that growth. As mentioned, the growth comes in 2 parts. I've covered the South African growth. There's also the long-term growth. On the long-term growth, I think there are two sides to that aspect. One, as mentioned earlier, we're looking at expanding our footprint. We're exploring opportunities in West Africa. But the second part of it is driven by the work we're doing on technology, where we're looking to bring to account or tend to account the low-grade, material or resources. And for those of you, with a pure, environmental perspective, what we're trying to do is we extract more from the resource than would previously do in the past. So we're saying we can use technology to extract that iron ore which previously would have gone to waste, so to say, and we're becoming more efficient. So you could also look at it from an eco-efficiency point of view. So that is the growth story. We're looking at ultra-high dense media separation to unlock these low-grade ores. And we've already got a pilot plant running at Sishen, and we're now exploring options in terms of the deployment of that technology. So two sides to the long-term growth strategy, low-grade technologies, as well as exploring opportunities with regards to the second footprint in West Africa. Right. In terms of productivity or value, addition, how are we creating value, how are we sharing, that value? I think the starting point would be to say, apart from what we say, what we claim, Kumba has been recognized through the years by various external parties, and we've, gained accolades, from and including from, the JSE, and we have been acknowledged as a responsible corporate citizen, and this has been, reflected in our, annual reporting, SD and integrated reporting. And, this ties back to, the fact that I mentioned earlier that people are central to our business, and through the efforts of, the collective, we have been able to, notch up some of those accolades. On the environmental side, most of you would be familiar with the Carbon Disclosure Project. We have, participated since 2010. We've been recognized, in the Global 500 Disclosure Leadership Index in 2013. We have been consistently recognized as a top performer in the Ernst & Young Excellence in Integrated Reporting Awards, top 10 in 2011 and 2013, and ranked excellent in 2012. So we have, received this validation, we've received, these endorsements from external parties. But that said, I think it's important for me to mention that, yes, we have received the accolades, but that does not mean that, we are perfect. We do have challenges, and there's certain areas where we're working on, as mentioned earlier, the improvements around our safety performance, our overall, environmental management. We've got projects, or we've got initiatives, I should call them program actually, that drive, our, energy efficiency. We've got what we call Eco2Men, which is an energy and CO2 management system aimed at improving our, energy, efficiency and consumption, as well as reducing our emissions. We have a WET program, which is the Water Efficiency Targeting and Tracking Program, which uses an estimated business as usual, curve against which we then try and improve our performance going forward. And this is integrated into our projects, it's integrated into our operations, and we do everything that we can to drive, that performance. On an annual basis, we have management reviews where we look at safety, health, and environment focal areas which are aimed at driving this improvement. So it is through this hard work and tackling these challenges that we have seen, some of the recognition that has come through. Right. If I can move on, I'm not, as I mentioned at the beginning, we do have, a couple of value-added statements where we've put runs and cents to the story. I'm not going to walk you through each of those, the detail. You've got the tables in the memory sticks that have been dished out. But in brief, the value-added statement summarizes Kumba's performance over the past, 3 years, which has been strong. It has been consistent. We have returned, or given returns or made returns to our shareholders. And notwithstanding the decline in the iron ore prices, I think we have been, a good partner. And in 2013. Specifically, right, 13.7 billion rands was distributed to shareholders, and Kumba continues to have, if you look up the tables in your business publications or websites, we continue to have one of the highest dividend yields in the industry, if not in the market. And and apart from that, as mentioned earlier, we are one of the most successful empowered companies, given the deals we've done and the ESOPs that we have in place with our employees. So the message once again, strong cash generation in 2013, and it has been shared within our shareholders happily. I think if you look at the dividends that we have paid, as mentioned, 13.7, 10.5 to shareholders, and 3.2 to our empowerment partners. And in terms of the contribution to the fiscus, as you can see, 8.3 billion paid to the South African government, 6.2 of that in taxes, and 2.1 of that as royalties. So we are a significant contributor to development within South Africa. Right, but that's coming back, I think, to the recurring theme in terms of how we share the benefits with our people. This is what we have done within our communities. We spent 254 million in 2013 on education, on skills development, on health, on welfare, youth development, enterprise development, as well as infrastructure development within our host communities in the Northern Cape. To give you tangible examples, we have built 11 early childhood development centers in between the Hamagara and Tsansabane municipalities, to be specific. And these have been constructed in partnership with the Northern Cape government. In 2013 alone, we built 413 houses. That's in that year. And altogether, that brings the total number of houses we've built since listing to 3,400. We no longer have hostels. We've converted our hostels to bachelor or family units, and that happened in 2012. So we continue to live through that aspiration that we're people making a difference. We're transforming lives, visibly in terms of bricks and mortar in our host communities that you can see. And just to go back to something that I have touched on already in terms of our empowerment partners, in terms of our BE shareholders, 23.5 billion returned to our BE shareholders. I mentioned our employees have a seat at the table. Our envisioned employee share scheme paid 2.7 billion to 6,200 employees below management when it matured in 2011. In addition to that, they received 775 million in dividends since listing. Our employees have received that. Then there's the SAIC Development Trust, which is also, owns 3% of the company. They paid off their 10-year loan in 5 years. They have an unencumbered, 3% stake in the organization. That delivers benefits to 361,000 beneficiaries in our, host communities. They've, funded 203 projects worth $1 billion since inception. So we're quite proud, of the track record that we have. We have had the endorsements. We have made, a difference in terms of human development in a sustainable manner within the communities that we operate in, and we're confident that we're valued by our stakeholders. If I can move on, I think most of you are aware that the mining charter is being reviewed this year, and we're confident that overall we will meet the requirements. As mentioned, I think I mentioned earlier that when we talk about transformation within Kumba, it's not a tick box exercise. It is about successful, broad-based transformation, and we've consistently been working towards this for a while now, and we're fully aligned with the objectives and intents of the mining charter. And to highlight some of the successes that we have achieved against those targets, whereas there was a 40% expectation in 2014, we're sitting at 55% in terms of historically disadvantaged South Africans in management. Against a target of 10% for the women in mining, we're sitting at 18%. And we have 61% of our discretionary procurement spend with BE suppliers. And this is against the mining charter target of 40%. And as mentioned earlier, from an accommodation point of view, we have no hostels. We've converted them to family units. So we continue to not only create value, but share value. Not only comply, but where we can exceed compliance in terms of, in line with our mission to make a difference. Right, if I can move on, I think the other important thing to highlight is, in any organization you have, things that you can control. And we do our utmost to use and move those levers, the ones that we can control. And some of our key efforts remain around improving our safety. And when I talk safety, we tend to use safety as the forerunner, as a catch-all for our safety, health, and environmental performance. And we do that, we measure ourselves against that, and we intend to improve on that. We're focusing on increasing our revenue and improving our unit cost, which is particularly important, in these times where prices are coming down. We're also looking at growing our production organically, as well as making sure that we've got good capex efficiencies in terms of putting our money to good use to deliver those unit cost reduction as need be. So we're focusing on our increasing our operating efficiencies. There's a multitude of initiatives that we're running, and I think our Session flagship has a couple of examples where we've, as I've mentioned earlier on, some of the work we're doing on the redesign of the pushbacks to include our efficiencies. So in addition to that, we're constructing new waste dumps to reduce lift distance, improve our efficiencies. There's filling stations being moved, being put in place to reduce the tramming distances, which also delivers efficiencies in our diesel and energy efficiency management systems. So those are some of the things we look at and the interventions that we're putting in place. We're looking at relocating the town of when you say town, it's a settlement of Dingleton, and this will increase mining flexibility. And we're overall rolling out this our new operating model with the intention of creating better and more value. As mentioned, these are the things that we can control. There are also things that we cannot control, which is things like iron ore prices, the exchange rate, as well as the legislative environment. Although on the latter, one should say where we can, we do proactively lobby and contribute to the development of that legislation. So in the end, the result is we create value and cash is generated, and that cash in turn is used to invest in a growing business which is in line with our strategic objectives, and we intend to create a sustainable company that will remain profitable in years to come and is valued by all our stakeholders. We intend to continue contributing to the South African fiscus through royalties and taxes, and where we can, we'll continue to return our surplus cash to shareholders after consideration of growth and investment opportunities, whilst we remain within the group's committed debt facilities. So that's the story in terms of our people. It's the story in terms of our growth. But perhaps one of the things I should also say, before ending off is, how do we, manage risk? And we're cognizant of the fact that investors remain cautious about organizations' ability and adaptability in terms of responding to risks in our environment. Within Kumba, and as part of Anglo-American, we've relatively sophisticated, multidisciplinary, multi-level risk management systems, or a risk management framework that promotes resilience. So just to take you through our approach. So this framework is aimed at not only managing the negative or potentially negative aspects of risk, but also capitalizing or realizing the opportunities that are in the environment. So we do intend to be adaptable, to be resilient. We're continually scanning our environment and questioning ourselves as a team and as an organization whether we're doing the best we can to prepare, foresee, and adapt to the changing environment. So we foster a culture that is well-informed, proactive, responsible, and accountable. In the delivery of our goals, and that looks at the environment on a continuous basis. So we have informed decision making, and we intend to capitalize on the opportunities and ensure that we manage our risks to successfully deliver on our strategic objectives. So this is the approach that we take, and just to give a couple of examples, we have, as I mentioned, multi-level, from a board level to an operational level to a mine level. There is structures in place that deliberate on risk and ensure that these are captured, tracked, managed, and we deliver on them. And in keeping with our commitments and our obligations, we then translate these into our material issues, which is your high-level view of what are the things that are important, what are the things out there that we need to make sure we're on top of. And we've summarized our material issues into four main issues. One is enhancing valuable partnerships. Kumba does not exist in isolation. We're an open system. We interact with partners. We interact with our shareholders. We intend to remain a good corporate citizen and safeguard our license to operate and optimize our performance. And in doing this, we need to work within that ecosystem that we are in. And that includes influencing and managing our relationship with employees, contractors, unions, local communities. I mean, the list goes on, and we've got some key strategic partners like Transnet. And these relationships are crucial in our ability to create value. And as a company, we want to ensure that our relations remain mutually beneficial. The second material issue that we look at is adapting to that proactively changing landscape. So we need to, as mentioned earlier on, we make every effort to anticipate the things that are coming at us, prepare for them and adapt as appropriate. And as some of you have followed the organization, a key material issue has been resolving our legal matters. We know that every legal dispute or challenge has potential for negative impact on the organization, and we've always worked towards resolving and reaching possible resolutions as timelessly as possible, and with an outcome that is positive for both us and our stakeholders. And as mentioned earlier and throughout the presentation, we intend to deliver on a sustainable future. That is part of our values, it's part of our strategies ingrained in us. It's a key issue that we continue to track and deliver on. You've got the detail in the presentation. I'm not going to go through the detail for each of the material issues. I think the structure is pretty straightforward. It addresses the key risks issues as well as the key stakeholders. So this I'm not going to go through in detail. And I'm sure and I'm aware that we're running out of time. I think in conclusion, I would like to say, as Kumba, we remain committed to delivering sustainable returns to our shareholders and our stakeholders. And we are one of the highest dividend yields in the industry currently, and we remain committed to delivering and sharing that that success. And we'll continue to operate responsibly as a good corporate citizen. We actually view ourselves as a development partner. And 2014 has been a year for execution. So we'll continue to focus on productivity, our operational efficiencies, and lower our costs and safeguard the safety of people and deliver on our environmental performance. So we continue to pursue growth, but all this is done with people at the center, whether it be people within our organization or people within our host communities or our shareholders in the broadest sense. So we believe in shared value and growth, and we believe we have a good story to tell. Thank you.
Thank you very much, Alex. Any questions for Alex? This one there.
Thanks very much. John Duncan from Old Mutual. Alex, two questions for you. The first one is, are you anticipating that there's going to be any change in focus from the government in terms of organizations' commitment to deliver on their social and labour plans?
Okay.
Curious to sort of hear your thoughts on that. We see some potential risk around that, particularly given the outcome of the Farlam Commission and what may go on there. And the second question is, how important is it for you as a company that your investors understand your long-term strategy? And what kind of investors are you looking for?
Okay. All right. I'll give it my best shot, but if need be, the whole fifth row is made up of my ably qualified colleagues who can assist as we go.
Yes.
Right, let's start with the first one. The government's expectations. I think that's the way it's framed. As Kumba and as Anglo-American, our intention is to become a development partner of choice. Our intention is to have a seat on the table and try and influence the policy trajectory where we can, and deliver a benefit to our stakeholders in the broad sense. So yes, we do expect that government, which is their role in that position, will ask for more, and we have an obligation to as business bring our 50% to the table, but there is a negotiation and a discussion process that we'll all have to go through, and as long as we keep the noble objectives in mind, we should be able to have a win-win solution out of that. I don't know if that answers you, but it is. We have to have a say in the development of the policy, and there's good intentions behind it. And as mentioned, as a development partner of choice, we need to look at business slightly differently at times. And when you have that lens on, it's a lot easier to deliver on some of those obligations. Your second question was on investors. I think as this forum attests or provides testimony to, and as any business would want to be, we are a responsible business, and we expect the same from the other counterparty or from our investors. So the long-term investment or the long-term investor, we are a growth story, we're a good news story, and we believe that in the long run we've been track record has been a good dividend yield. So I think we are a good believer in the long run. Yep. And if you look at our sector in terms of how we coupled to China in terms of the growth trajectory, we coupled to, you could look at it from an infrastructure point of view. So we are a good news story, and for the long run, everything should look good.
We also have Avanti, who is the company secretary, and Isha
Yep.
with us today, who's the head of
Yep.
investor relations. So if you'd like to engage with them over lunch, you're more than welcome to. If you just put up your hands.
The whole fifth row.
So the whole.
And Rogers as well. Right. Another question.
What has differentiated your labor experience from the rest of the mining sector, especially in the Anglo-American group? Your sort of AMPLAT has completely different labor experience to what you experience.
That's a tricky question. I think, in all fairness, we have walked the same path. We have walked the same road. We've had similar, perhaps not so pleasant experiences in the past. But what has happened is we have learnt from those experiences. We've stepped up our communication, our engagement. We continuously emphasize the partnership story to try and engage all parties in and make sure that we understand that we have a common interest and a common goal in delivering on our objectives and sharing the value that comes thereof. So that's in my view, some of the contributing factors when people have a seat at the table, when people realize the benefit they derive from the organization, the environment and the relationship will be healthier. But we're not perfect. We've also had our tensions and issues in the past on that front.
How easy is your relationship with labor, just organized labor in terms of unions?
Okay, I'm the greenie, the safety, health, and environment guy. So I'm speaking from the sidelines, let me say. But as part of the organization, I have a good feel of those issues. It's not an easy relationship, but it's a healthy relationship where both parties have a role to play. As with any relationship, it has to be maintained, and that maintenance comes through on both parties. As mentioned, I'll repeat again, we're not perfect, but we spare no effort in maintaining that relationship, engaging. If you talk to our guys at mine level, the examples, the issues that you will see around direct engagement through the different levels, sitting at the table, being participative and consultative in approach is something that we have not perfected, we have not overcome, but we continue on an ongoing basis to strive towards. So it's not an easy relationship, it's work in progress, and perhaps it will always be work in progress.
Just on your housing delivery,
Yep.
I think you guys have obviously done very well in the past. What sort of future plans in terms of housing delivery to employees, and is that sustainable at 80 to 85 rand iron ore prices, given that you delivered over a period of much higher profitability than possibly what we're going to see going forward?
I think within the existing constraints and within the objectives in terms of what we want to achieve, try and achieve, obviously our operations sit in remote locations. So we strongly feel we have an obligation to do the best we can, where we can within the means, to provide housing, to secure the roofs of our employees' heads. So there are various mixes and various means that we can look at that. We've done a lot in the past, and we'll continue to explore options where we can. I mean, given the constraints that there is. But the good thing is we've been in operation for a while. We had housing stock before we built what we've tabled. So we think we've got a healthy balance. Yes, we need to look at seeing if we can do more and strike the balance between home ownership and providing housing, but that's something that we continue to pursue. But we are in a good space right now, better than most in terms of our housing situation.
One last question.
Hi, I just wanted to ask, what is the process behind coming up with that 254 million you spend on your host communities? How do you get to that number?
If my colleague Yvonne was here, they should give you, we've done the two things. One, there's the baseline or the foundation, the basis is what's legally required. And that is whether you look at our SOPs, whether you look at the BE codes, there's guidance. Two, we've done studies in our communities. We've done studies in all our host communities where we've then said what are the needs, what are the issues that we need to deliver on. And then when you look at the information that you have on the ground, what your research tells you, and you look at the guidance that you also get from legislation, then you look at what the business, how the business is performing and where you are, and then you come to perhaps a mid ground, so to say. So because social issues and people issues are so important to us, at times you spend more than is the minimum requirement, but that's driven by the needs on the ground and the research that you have, and obviously the business affordability component.